Hey, it's H here. Today we're taking a look at technical analysis for silver. We'll go over some key levels of support and resistance and cover wave analysis with Elliott Wave theory. Let's get going. First of all, let's take a look at where we actually stopped last Friday. The May 9th close was around here $21, but it peaked down here around $20.5, and that area again was an area of resistance here, or support, where we had this nice volume bump where this volume started to come in. Definitely some buy orders there, and we got a nice rally from the lows. If it's we'll check it if it is actually a sustainable low in just a moment. But again, I didn't have this volume data back then, and I'm not even sure if this is a good chart to look at volume, but let me know if you have a better one than this Oanda for silver, so I can check that for the next video. Now for the count itself, for Elliott Wave stuff, we had a count base basically something like this, saying that we ended something big here, had a 5-wave structure up to 1 and currently making the wave 2. I had this structure in mind. Let's go to 1 day. Had this structure in mind at WXYXZ. Whether it's done now or not, we'll get into that in just a moment. So again, there's two possibilities for this last leg here. Either we can consider this here as a 3-way move, or we can consider this as a 5-way move here. If it is a 5-way move, we are expecting a 3-way move here for the Z wave. We are doing this 3 waves up and then again 5 waves down. And those are the two possibilities. Whether this is an A of 5 waves or whether this is actually just an A, B, C. The point of the WXYX usually is to spend more time and get lower lows in, which it has done. So it has basically already completed its goal. So we definitely could be ending the count here. Let's take a closer look. Let's go over the first idea here. So again, this is saying that we have 1 here, 2 here, that should be on that one, 2 here, and then 3, 4 and 5. 3 is gone above the 1.618, which is the expected extension for this. Wave 4 is some kind of a flat pattern, and then we have 5-way structure coming down in the current lows that we had for a possible A wave. And this is again, if we have this marked as a 1, 2, 3, 4, 5, then we have this B wave to come and then C wave to take us lower. If this is labeled as such, as in 1, 2, 3, 4, 5, again, the wave B cannot go over the 89% retracement, which is all the way up here, around $25.80 something cents. What is good about this count is all of the divergences we want basically. Let's go to 8 hours or 4 hours maybe. Yeah, 4 hours to be fine. So highest low or lowest low, sorry, on RSI we can find for the 3rd of subminuet, of the 3rd of minuet, of the 3rd of minute, making us loads of divergences. So divergence between these lows, divergence between these lows, divergence between this and the current lows here that we had. So definitely a viable count. Also divergence between the 3rd here and the 5th we can see it, and also the third here and the fifth of the last. So definitely something, to me at least, looks very finished here. I've taken a position down here, but whether it is actually just a B wave here or a start of a new bull run, I'm not quite sure yet. We will have to monitor this wave structure, whether it becomes a 3-wave structure into B or whether it is actually a 5-wave structure. If it's a 5-wave structure, we can add more when we come down here, so we can prepare ourselves for the future of the bull run. Now the second option is here, is this one. Let's close that one. Is saying that this isn't actually A, B and C. And this is saying that we ended something completely here, that the Z is definitely in. Now what I had to do here is create a zigzag ending diagonal, ending expanding diagonal into the third, or into the fifth of minuet, into the third of subminuet, oh sorry, into the third of minute. Yeah, there we go. We still have the divergences that we would be looking for, except we don't have it here. But let's check out a closer time frame if we actually do, because that is very high time frame. It should be probably here. So third here, fifth ending here. So actual divergences are measured from this low to this low here. So there is divergence on a smaller scale, so this is valid as well. Which scale were we on? This one. Yeah, there's good looking structures here for this count as well, and this one would be looking for the 5 waves to come. Again, I took my long here, but definitely will be adding if we get 5 waves here and 3 waves back, and at that point we have a nice solid invalidation point below these current lows. Currently I don't have a stop loss here. I put my stop loss further away, just in case there is one more low here for some reason that I can't find it. But if one of these structures here could be some kind of WXY here or something like this, so this actually could be the fourth of this fifth. Of course it can't go to the highs here of 21.466, so it doesn't invalidate the impulse wave itself. But yeah, definitely a good area to take a long, in my opinion. Not financial advice, of course. Here's my money, and this is just the market how I see it. But I think that's all I wanted to share on silver. Let me know if you have another count, or if you would like to have an update on something else that I've already created Elliott Wave count for. Thanks for watching, and see you on the next one. Bye bye.